Hey everyone, it's Hima here. Happy Monday. It's December 9th, and I have got a chart of the week oil futures update for you with a very special guest. Now, before we dive into the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. All right, here I've pulled up the daily chart of NYMEX crude oil, that's WTI. And we are looking at the latest price action, and I have a very special guest, an oil investor who happens to be my husband Srinivas. Now, I see a couple technical things going on, but first I want Srinivas's update on the fundamental goings on with oil because he's very up to date with them. So he shared some stuff with me this evening that I thought you all need to know, so here he is.
Well, hello everyone. Thanks for having me, Hima. So I think in the short term, there are a couple of fundamental issues that are bullish for oil prices. The first are the recently agreed upon cuts with OPEC and OPEC Plus. As everyone knows, Saudi Arabia is leading those cuts, likely with the goal of boosting the Aramco evaluation. Secondly, starting on January 1st of 2020, there is an international agreement that will be enforced in which all of the large tankers that transport goods across the country will have to start using very low sulfur oil. Either that or they'll have to start using these scrubbers to decrease the amount of sulfur emissions. I think this has the potential of perhaps decreasing the spread between WTI and Brent crude because we all know that WTI is a much lower sulfur and sweeter crude compared to Brent. And so that may increase the price of WTI relative to Brent and may result in a disparate price pattern between the two. Usually WTI and Brent not only move in the same direction, but move in the same magnitude. And then, of course, from an intermediate standpoint, the big issue is supply and demand, right? Right now, the theory is that worldwide economic growth is low, and therefore the demand for oil will be low. And a lot of that is also stemming from the fact that people assume that the amount of shale production, especially from the Permian, will be the same next year. That is, the growth will be the same next year in 2020 as it was in 2019. I think that's a little bit controversial. I think those assumptions are currently being challenged. Issues revolving around parent-child well issues, issues about overestimations of current drilled but uncompleted wells, for example, are really challenging that assumption that we'll see the same amount of shale growth in 2020 that we've seen in 2019. If those challenges do in fact come true, then it raises the potential that especially in the second half of 2020, there may be a substantial increase in WTI prices compared to what most are expecting.
Awesome. All right. So as you guys heard, there are three key factors that Srinivas is observing, hearing about feeding into likely higher oil prices. So let's talk about time frame for a second. And Srinivas, I'd love your feedback on this. All right. So you gave us the fundamental layout. I'm going to come in with my technical sword and duke out the details. So here you can see, guys, that the 58.74 resistance level, as noted in the Skinny Markets Outlook, has been exceeded. And we've had 2 daily sessions close above it. That's a good sign for further upside. Here's the thing, guys. What you just heard was, again, fundamental take on when crude oil is set to really accelerate in one direction or the other or potentially turn. And then my own methods, my market timing methods, have produced an updated date of January 9th, 2020 as a very short-term point to look at in the future, okay? So that falls in line with the longer-term outlook in the Skinny Markets Outlook, which is for further out in the year of 2020. But right now, we are seeing that potential. So the next upside target. Now, Srinivas, do you think that getting to 61.05 for CL futures here fits in line with what you said about the fundamentals?
Yeah, I definitely think so, especially with the prospects of a decreasing in spread between WTI and Brent. Yes, I think that that's a very realistic price point.
Okay, great. So that's what I was seeing from a fundamental point of view. That's what I was seeing from a technical point of view. And actually, the latest moves higher here from the RSI power zones support that as well. So if we can really get through this barrier of previous overbought conditions that have plagued oil for the past several weeks, that would be a good sign. So next upside target in the very short term, 61.05. Bigger picture, on track to 63 to 65 in my view. I'm keeping an eye out for stocks in the XLE, so that's the S&P 500 energy sector, that may still have room to move lower because of a little bit of a lag of energy stocks picking up even if oil picks up, and some that are basing out and turning higher. So I will be taking an extra close look at those when I do the Skinny on the Stocks update on Tuesday, December 10th. So keep an eye out for that in the Full Skinny Lifetime update section. I post those stock picks by 11 p.m. Eastern on Tuesdays. All right, take care.
Stay classy.
You can sign up at himaready.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.